I want to teach you how to use AI so you can do work for more clients and charge those clients less money. That is the formula. Serve more clients. Charge each client less. Keep more profit. I know the middle part of that formula is going to bother some of you. You have spent years being told to raise your prices. You have been told to know your worth. You have probably been told never to take an inexpensive engagement. I understand all of that. I have operated accounting firms for a long time. I have hired hundreds of people. I have sold expensive engagements. I know how the traditional model works. I also think that model's becoming the weaker growth model for bookkeeping. AI gives us a chance to rebuild the economics of the firm. Software and agents can do the repeatable work at a fraction of the old cost. You can supervise that work, handle the exceptions, talk with the client, and make sure the books make sense. If we do this correctly, the client pays less. You make more. You can serve a much larger market without building a large staff. That is why you need to learn about AI. Over the next 24 months, your clients are going to start asking a reasonable question. If AI and software are doing more of the work, why does bookkeeping still cost the same? Maybe they will not ask you that exact question tomorrow morning. Some of them will. Most of them will simply start behaving as if the answer should be obvious. They will see software companies advertising automated bookkeeping. They will see AI categorizing transactions. They will hear that a computer can read a statement, answer questions about a report, or send a reminder. They will start wondering why the monthly bookkeeping bill is still $300, $500, or $1,000. This does not mean the client understands accounting. It does not mean the client knows whether the books are right. It does not mean the client can build the system that produces reliable books. The client still needs you. The client's expectation about the price is going to change because the cost of producing the work is changing. You can be angry about that. You can argue that your experience is worth more. Your experience is worth more. That does not force the client to pay for hours of work that software can now perform. The opportunity belongs to the accountant who changes first. You can lower your cost to serve. You can share some of that efficiency with the client. You can offer professional bookkeeping at a price that is close to what the owner already pays for software alone. Then you can serve many more clients than the old model allowed. There's another reason I want you thinking about this now. The software companies are not waiting for the accounting profession to get comfortable. They are selling directly to your clients. They are telling business owners that AI can clean up the books, find problems, answer questions, and make accounting easier. Some of those claims will be better than the product can deliver. That will not stop the claims from changing what the owner expects. The owner is going to see more automation every month. The owner will assume that less human labor should mean a lower total price. If your response is that you still perform every step the old way, the owner may decide that your firm is the part of the process that is not improved. I do not want that to happen to you. You have something the software company does not have. You know the client, you know accounting. You can understand what happened in the business. You can answer for the work. Combine that professional relationship with a production system that is more efficient than anything the owner could build alone. That is a very strong position. Let me be honest about what I am promising. I am not going to show you how to make $30,000 a month while you work 15 hours a week and spend the rest of your time on the beach. If you have 200 clients, you have a full-time job. You are going to talk with clients. You are going to sell. You are going to monitor the work. You will fix things that break. Sometimes you will work on a weekend. You will have credit cards that fail. You will have people who do not answer. You will have unusual accounting questions that require your judgment. What I am promising is much more capacity for every hour you work. If you currently have enough time to handle 5 clients, this model may let you handle 50. If you currently have 70 clients and work 70 hours a week, this model can give you a path to 200 clients without working more hours than you work now. The exact number will depend on your companies and your systems. The direction does not change. Better systems let one person carry much more work. This is a serious business. It can also be a much better business. Think about what happens to the person who has 15 hours a week. Under the manual model, 5 clients may fill those 15 hours. Each client has a different process. You clear the transactions, send the reminders, reconcile the accounts, prepare the reports, and answer the questions. When a 6th client calls, you feel full. Under the model I am describing, the same 15 hours may support 50 standard clients. The systems work while you're not sitting at the computer. Your 15 hours go to review communication sales and the exceptions that need you. 50 clients at $150 produce $7,500 a month. 5 clients at $200 produce $1,000. Those are teaching numbers. Your exact capacity will differ. The point is that the better operating model wins at every amount of available time. You do not have to wait until you can work full-time to benefit from it. You build the same system and operate it at the size your time allows. Here is the firm I want you to picture. 200 bookkeeping clients. Each client pays about $150 a month. That produces $30,000 a month of recurring revenue. That is $360,000 a year. The firm has one owner. It uses accounting software, AI agents, payment processing, and a small group of connected tools. The owner still has costs. This is not $360,000 of guaranteed take-home pay. If the technology and operating costs came to $40,000 a year, the illustrative amount left before taxes and any other firm costs would be $320,000. That is not a profit promise. It is a simple illustration so you can see the size of the opportunity. The important part is that you are no longer paying a large staff to produce the routine work. You are using software and agents to carry the volume. Your time goes into supervising that system, improving it, talking with clients, and growing the firm. That is a different business from taking every transaction through a human bookkeeper. Look at the unit economics for one standard client. The client pays $150. Ledger HQ's regular price is $20 per business. That leaves $130 before payment processing, additional AI tools, your time, and the other costs of the firm. Your job is to build the workflow so those remaining costs stay low. If the engagement requires 3 hours of your time every month, the model is not ready. If each client has a special spreadsheet, a special report, and a special meeting, the model is not ready. If every transaction comes to you for a decision, the model is not ready. You do not solve those problems by hoping the price works. You redesign the process until the human time falls far enough for the price to produce a healthy margin. Then every additional standard client enters the same system. You're not adding another job to your life. You're adding another company to a process that already runs. For most of my career, the professional services playbook has been simple. Raise your prices. Find clients who can pay more. Avoid inexpensive engagements. When you get busy enough, hire someone. Give that person the work. Keep hiring as the firm gets larger. The accounting profession reinforces this constantly. You are worth more. Charge what you are worth. Never compete on price. A $2,000 monthly client is better than 10 $200 clients. That advice made sense when every engagement required a substantial amount of human labor. You had to recover that labor in the fee. Now the production system is changing. If Tally can code the routine bank activity, if GrokBot can check which statements are missing, if a system can remind a client without you touching it, and if reports can be produced and delivered through a pipeline, then the client no longer has to fund every manual touch. That does not make you less valuable. It means the service costs less to produce. The mistake is taking the old manual service, keeping all the manual work, and cutting the price in half. That would be a bad business decision. We are building a different service. It has a standard workflow. It uses software for the repeatable work. It brings the exceptions to you. It has a different cost structure and a much larger capacity. The lower price is possible because you change the work. I also want to separate this new offer from the clients you already have. I am not telling you to call every current client and cut the fee in half. If a client is happy with the service and the price, keep the engagement. You sold that work under the old model. You may still be delivering it under the old model. We are talking about how you reach the next group of clients. If you have 70 clients and want to reach 200, the next 130 clients are probably not going to arrive at the same price and with the same custom service you have today. The firms that can afford a large monthly bookkeeping bill have already had many chances to hire someone. The larger opening is among owners who still do the bookkeeping badly, owners who do not know whether it is right, and owners who cannot justify paying a traditional firm several $100s every month. Those owners are not saying that you lack value. They are saying that the old delivery cost does not fit their business. Build a delivery system that does fit, then price that system so the choice becomes easy. This is where I want to challenge the phrase, know your worth. Your worth and your price are not the same number. Your professional judgment may be extremely valuable. Your relationship may be valuable. Your ability to spot a problem in the books may save a client thousands of dollars. The monthly price also has to make sense for the service being delivered and the market buying it. If a machine can complete a repeatable step for pennies, requiring the client to pay for an hour of human labor does not prove that you value yourself. It shows that the production system has not changed. Keep the valuable human work. Remove the unnecessary human work. Charge a price that opens the market and leaves enough margin for the firm. That is a more useful expression of your value because many more businesses can afford to receive it. Let's compare two firms. The first firm has 4 large bookkeeping engagements. Each one pays $2,000 a month. That firm makes $8,000 a month. For a lot of bookkeepers, those clients feel like success. You land one and think, this is a big engagement. This client is going to keep me busy. I can build the firm around work like this. The engagement may take 20 hours a week. It may involve special reports, special meetings, special spreadsheets, and a process built around that one client. How many of those clients can you take? 3? 4? At 4 clients, you have $8,000 a month. You are busy. Your calendar is full. Every client is important enough to control how you work. Now compare that with 200 clients paying $150 a month. That is $30,000 a month. Those companies need bookkeeping. They need bank activity coded. They need accounts reconciled. They need financial statements. They need someone who knows whether the books make sense. They do not each need 20 hours of your week. You give them a standard process. Your systems perform the routine work. You handle the things that require a person. The traditional firm is trying to make each client worth more. The AI-operated firm is trying to make each engagement easier to deliver and available to a much larger market. If your goal is to make more money, I think the second model is better. There is a lifestyle difference too. When 4 clients produce all the revenue, every request feels urgent. A large client asks for a special report, and you make it. The client wants a meeting tomorrow, and you move the calendar. The owner changes the way information arrives, and your firm adapts. You may tell yourself that this is premium service. It often means the client controls the operating system of your firm. With 200 standard clients, the process controls the work. The client receives a clear, consistent service. Unusual help can still be available. It does not quietly become part of the standard monthly workflow. That gives you more control over your time. It also makes the client experience more dependable because the result does not depend on how much you happen to remember that week. The volume model also gives you a more durable firm. If you have 4 clients and 1 leaves, you just lost 25% of your recurring revenue. That client may leave because the company sold. The owner may retire. They may hire an internal accountant. They may run out of money. You can do excellent work and still lose the engagement. Now you need to replace a $2,000 client. Those engagements are hard to find. They take time to sell. They often require a proposal, several meetings, and a long transition. If you have 200 clients and one leaves, you lose 0.5% of monthly revenue. You notice it, you replace it. It does not change your life. Even if several clients move in and out over the year, your revenue remains stable because no single company controls the firm. And the replacement market is enormous. The U.S. Small Business Administration reports more than 36 million small businesses in the country. They are not all good prospects for this service. They do not need to be. At a compelling monthly price, there are far more small businesses looking for help than there are $2,000 bespoke bookkeeping engagements ready to buy. That gives you a business with less concentration risk and a much larger pool of replacements. It also changes the way you sell. You do not need every prospect to believe that bookkeeping will transform the company. Most small business owners already know they need books. They need a tax return. They need financial statements when a lender asks. They need to know what happened in the business. They know ignoring the work creates a problem. Your offer removes the part they dislike. They no longer need to become a part-time bookkeeper. They do not need to learn the software. They do not need to wonder whether they created a mess that someone will have to repair later. At $150, the conversation becomes much shorter. You are already paying for accounting software and spending your own time on the work. For about this amount, my firm will handle the standard bookkeeping for you. That is easier to understand than a large proposal filled with deliverables. You also gain the ability to learn from the whole book of business. When 200 companies move through one process, every exception teaches you something useful. You can see which questions appear repeatedly. You can improve one instruction and help dozens of companies. You can change one request and receive better answers across the firm. In a bespoke firm, every lesson may apply to one client. In a standardized firm, one improvement can increase the margin and quality of the entire client base. That compounding effect is one reason capacity can grow so quickly. The 200th client receives a better system than the 20th client received because the system has learned from every company that moved through it. There is another reason the volume model gives you a more durable firm. Someday, you may want to sell it. After you have spent years building the company, serving the clients, and creating the income, you should have something of value at the end. When it is time to retire, you want to transition the clients to another owner. You also want a financial reward for the business you built. That means you need to think about the enterprise value of the firm while you are building it. Imagine a bookkeeping firm with 8 clients paying $2,000 a month. It produces $16,000 of monthly revenue. Now imagine you are the buyer. Those 8 clients may be deeply attached to the previous owner. They may expect that person's communication style. They may expect special meetings, special reports, and the exact workflow they have used for years. The buyer is not only taking over the revenue. The buyer is taking over 8 large relationships that may depend on the seller's personality. If one client decides after 6 months that the new owner is not a fit, the buyer loses 12.5% of the business. If 2 leave, the buyer loses 25%. That is a much riskier purchase. Now compare it with 200 clients paying $150 a month. One client represents 0.5% of revenue. Several clients can move in and out during the transition without changing the entire economics of the deal. More clients create a wider safety margin for the buyer. The revenue is spread across many relationships. No single personality request or departure has the same power over the business. The buyer also sees evidence of a system. Nobody manages 200 clients by remembering how every engagement works. The firm needs a standard intake process. It needs repeatable bookkeeping workflows. It needs a way to monitor what is behind. It needs consistent client communication and report delivery. Those systems are a large part of what the buyer is purchasing. The client list is valuable. The buyer also wants to know how the firm serves those clients and how it finds the next ones. Every buyer wants the ability to expand the business. If the firm has 8 $2,000 clients, growth means finding another large client willing to buy a bespoke engagement. That can be a much harder sales problem. Those prospects are difficult to find, take longer to sell, and may demand another custom workflow. If the firm has a proven $150 offer, the buyer can grow by adding another 10 or 20 standard clients to the same system. The market is larger. The offer is easier to explain. The delivery process already exists. That makes the growth engine transferable too. When you build for volume, you are creating more than monthly income. You're creating a firm another person can understand, operate, grow, and feel safer buying. I have watched many businesses be sold. It is much easier to sell someone a 200 client book of business with working systems than an 8 client book of business held together by the previous owner's relationships. Think about retirement now. Build the firm that a future buyer will want. Here's another version of the math. Let's say you have 70 clients paying $200 a month. That produces $14,000 a month. It produces $168,000 a year. Now move to 200 clients paying $150 a month. That produces $30,000 a month and $360,000 a year. The price per client goes down by 25%. The monthly revenue more than doubles. The client count increases by about 186%. For 200 clients to require less total human time than 70 clients, your human time per client has to fall below 35% of what it was before. That means reducing human effort per client by more than 65%. That is a serious target. It is also the point of the systems we are going to build. If rules, tally, and bots handle the repeatable work, the accountant reviews a small exception set instead of touching every transaction and every step. I'm going to back this claim with operating workflows. I am not asking you to accept a spreadsheet fantasy where 200 clients somehow disappear into the computer. The work still exists. We are changing who or what performs it. Let me make the 65% reduction more concrete. If the old firm spends 2 hours of human time per client each month, 70 clients require 140 hours. If the new system reduces human time to 30 minutes per client, 200 clients require 100 hours. You serve almost 3 times as many clients. Total human production time falls by 40 hours. Monthly revenue rises from $14,000 to $30,000. The old model produces $100 of revenue for each human production hour in this illustration. The new model produces $300. That is what we are trying to build. We are not trying to squeeze more clicks into the day. We are changing the amount of human work attached to each dollar of revenue. Your measurements matter. Track the minutes. Track the exceptions. Track how often work has to be corrected. Track which clients create custom work. The firm needs evidence that the system is becoming more efficient while the books remain sound. The competitor for this service is often not another bookkeeping firm. It is the business owner doing the books alone. As I am preparing this presentation, QuickBooks lists Plus at $115 a month and Advanced at $275 a month. Intuit is advertising temporary introductory prices of $57.50 and $137.50 for the first 3 months. So the business owner can easily look at an accounting software bill that is around $100, around $140, or much more. Then the owner still has to do the bookkeeping. They have to set up the file. They have to connect the bank. They have to answer the questions. They have to notice when something stops importing. They have to reconcile the accounts. They have to decide whether the financial statements make sense. That owner may never pay $500 a month for bookkeeping. The same owner may gladly pay $150 a month if the offer is stop doing this yourself and let a professional handle it. Think about the difference in what the owner is buying. With software alone, the owner is buying access to a tool. The owner remains the operator. The owner is still responsible for noticing what is missing, learning the workflow, and evaluating the result. With your firm, the owner is buying an outcome. The books are handled. The accounts are monitored. The owner answers the narrow questions only the owner can answer. A professional reviews the unusual items and can explain what the financial statements mean. That relationship matters more as the software performs more work. Someone still has to know whether the system is working. Someone has to be accountable for following up when it is not. That is the market opening. QuickBooks is a software system. It offers product support and a growing set of AI features. The owner still has to operate the bookkeeping unless the owner buys a separate bookkeeping service. Your offer combines the tool and the operator. That is why the comparison should not become a feature war. The owner may never care which system has a longer list of settings. The owner cares that the work is finished, the price is reasonable, and there is someone to call when a question appears. At $150, you can make a simple promise. Give us the books and follow the standard process. We will operate the system for you. Let me give you a comparison that may be a little uncomfortable for accountants. Think about changing the oil in your car. I am sure I could figure out how to change my own oil. I could watch YouTube videos. I could research the pitfalls and the problems. I could figure out what equipment I need. I could learn the safety procedures. I could buy the oil and the filter. I could find a place to do it. I could figure out what to do with the used oil when I am finished. Somewhere in that process, I might convince myself that I am going to save money over time. If an oil change cost me $150 every time, I would probably do the math. I would say, I can buy the oil for less. Maybe I should learn how to do this myself. That is not what you see across the market. Oil change businesses systematize the work. They perform the same basic service over and over. They have the equipment. They buy supplies efficiently. They know the sequence. They know how long it should take. They can move one car through and bring the next car in. They made the service efficient enough that I look at the price and think, why would I do this myself? It is easier to pay them. It does not cost much more than buying the oil and handling the entire mess on my own. Yes, I pay more than the raw cost of the oil. I am paying for the convenience. I am paying for someone who knows what they are doing. I am paying to have it finished without spending my own time on it. The provider still makes money because the provider built a repeatable system. And notice what I am not shopping for when I buy an oil change. I am not asking the shop to prove how many minutes of human labor went into my car. I am not disappointed if better equipment lets them finish faster. I do not demand a lower quality process so I can feel that more effort happened. I care that the correct oil went into the car, the service was completed, and I can leave without spending my afternoon underneath the vehicle. The value is the result and the convenience. This is why the market price matters so much. If the oil change shop charged me $500, I would reconsider the convenience. I might learn the process. I might delay the service longer than I should. I might look for a neighbor who can do it. The provider's expertise would still be real, but the price would push me toward doing the work myself. At a reasonable price, I do not need to become an oil change expert. The shop wins because it receives my business. I win because I keep my time and the car gets serviced. That is the relationship we want with the small business owner. At $500 a month, the owner may keep struggling, let the books pile up, or pay for cleanup at tax time. At $150, the decision changes. The software may already cost close to that, and the owner is already spending time on the work. For a small additional amount, or perhaps no additional amount compared with a higher software plan, the owner can hand the responsibility to a professional. That creates a client who is never going to buy the $500 service. The owner gets better books with less effort, and your firm reaches a market the traditional model priced out. Here is the part that is hard for accountants to hear. For many small business owners, bookkeeping feels a lot like an oil change. They know it has to be done. They do not enjoy doing it or paying for it. They can buy QuickBooks and spend evenings learning the software, untangling a bank balance, and deciding whether a payment is income, a transfer, or a loan. Most of them do not want to. Our job is to make professional bookkeeping feel like the obvious oil change decision. Why would I keep doing this myself when I can pay someone about the same amount as the software and have the work handled for me? That is the offer. You still bring something the oil change comparison cannot fully capture. You know accounting. You can answer a question. You can recognize when the financial result does not fit what happened in the business. You can help the owner respond when something unusual appears. That professional relationship is part of what makes $150 feel like an extraordinary value. An oil change business cannot offer that price if every customer designs a different oil change process. One customer cannot ask them to perform the work in a parking lot on Tuesday, use a spreadsheet to report every step, communicate through a special app, and deliver custom reporting afterward for the standard price. The service works because the process repeats. Bookkeeping has to work the same way. You choose a standard process. You connect the bank activity. You define how client information comes in. You let software and agents perform the repeatable steps. You send the unusual items to the accountant. You deliver a consistent result. Ledger HQ's regular price is $20 per business each month. Tally does the routine bookkeeping. That creates room for you to sell a complete standard service at about $150 and still have a healthy business. The owner is no longer paying a large software bill and doing all the work alone. The owner receives the software, the bookkeeping, professional oversight, someone who can answer questions, and someone who knows whether the result makes sense. This is also why your standard matters so much. The client needs to know what happens every month. Your agents need to know what happens every month. You need to know what a completed month looks like without rebuilding the definition for every company. The more predictable the service becomes, the easier it is to automate. The easier it is to automate, the lower your cost becomes. The lower your cost becomes, the more compelling your price can be. A compelling price brings more clients into the same system. That cycle is the economic engine of the firm. You are no longer earning your fee by touching every transaction. You're earning it by building and supervising the system that produces the books. That is the first major identity change in this course. You are going to stop being the doer. You are going to become the orchestrator. That is where we will begin in video 2.